First program review and approve about $600 million for the country.
So we are in a good place for that engine to be cranked, for us to see the jobs back and the projects being done. So that's a good part.
Also coming up, as the Monetary Policy Committee gets ready to hold its first meeting for the year, we hear from a finance expert, Dr. Benjamin Amoah, who backs calls for a reduction in the policy rate.
It is very possible that the policy rate reduction of 800 basis points will happen by the end of the year. This is simply because inflation rates for the past 3 months or 4 months have been declining.
Also coming up, 72% of enterprises perceive Ghana's business environment as lagging behind its peers on the continent. We have details from the UK-Ghana Chamber of Commerce 2023 Environment and Competitiveness Survey. My name is Daryl. Kwawu. Thanks for being with us. Details coming up. And first up, the Executive Board of the International Monetary Fund is set to pass Ghana on its first review under the fund program later today. This is based on what Joy Business has picked up from persons with knowledge of the meeting scheduled for this afternoon. Now, the board is also expected to approve and disburse about $600 million to Ghana within the next 3 working days. However, it is not clear for now what will be the IMF's verdict on the current state of Ghana's economy and the challenges ahead. Meanwhile, Finance Minister Kenneth Riata has been giving details on areas the funds will be directed to. He was speaking on PM Express Business Edition.
Because we are also fortunate to be able to extend the cutoff date to December 2022, it puts all of the projects in play in a sense that we can now get into bilateral discussions, and therefore they are all encouraged to begin to release the resources that are required for them. So we are in a good place for that engine to be cranked, for us to see the jobs back and the projects being done. So that's a good part.
So that's a surety that because of this, that we are going to see some of these major projects resuming as well.
Yeah.
The inflation bit that you spoke about,
right?
How committed is government to doing what it has to do, food prices and all those things, for us to see that trend continue because of the broader impact it has on interest rates and cost of living and all that? Someone said that starts with government in terms of the fiscal discipline.
Yeah. Good question. I mean, so what is the evidence?
Or what else can you show us as the person that signs the check and when a colleague minister or George Afekolo comes to you and insists that, Minister, you have to sign the check for me, but doesn't fall in line with the budget and all the pressures, and what surety do you give to us?
Then it won't happen. I mean, we have moved inflation by, what, 31%, George? That took, quite a bit of work and an ability to say no. I think the country is aware of the cost of inflation and much more aware of the cost of currency depreciation. So we are aligned. I think there's one language, and the Ministry of Finance is not here to be loved, but to make sure the community crosses the Jordan. And the consequences are quite dire, because in June, we expect a 300 million release. In December, another 300 million. We can't afford not to have that, which means that the indicative targets, the benchmarks have to be met. And in there is embedded the issues of expenditure, etc., that we would adhere to. We have done it in the past 1.5 years, as you can see, and we'll continue to do that. So those are guardrails for us.
All right, and we expect a joint press conference tonight at 7 to be addressed by the IMF, the Ministry of Finance, as well as the Bank of Ghana. We'll bring that to you when it happens, so keep it here on Joy News. Now, turning to other stories, Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amoah, says he expects the Monetary Policy Committee of the Bank of Ghana to reduce the policy rate as it heads into its first meeting for the year next week. The Business Committee has called for a reduction in the policy rate, citing inflation decline, but some analysts have cautioned against any knee-jerk reaction. However, Dr. Amoah says a decline in inflation should send a positive signal for the policy rate to be eased. He spoke with my colleague, J.C. Agbako, who asked him about Fitch Solutions' projection of the policy rate reaching 22% by end of year.
It is very possible that the policy rate reduction of 800 basis points will happen by the end of year. This is simply because inflation rates for the past 3 months or 4 months have been declining. And if you look at the factors that influences the policy rate, inflation is a major factor. So with the economy turning around and inflation rate declining, it will go a long way to reduce the MPC rate. We should not also forget that once the MPC rate reduces, the Ghana reference rate will also see some reductions, because the MPC rate is about 40% in the weightings that goes into the Ghana reference rate. When that happens, loan rates, all being equal, will also decline accordingly going forward. So we should be expecting that as inflation keeps on declining, the monetary policy rate will also decline. Hence, Ghana reference rate will decline, and then cost of borrowing will also decline.
Generally, what would that mean for the economy, talking about the real sector?
Okay, so for the economy, once you have MPC rate declining, Ghana reference rate will decline. Banks will have to readjust their rate on loans downwards, and the cost of funds will be cheaper going forward than it is currently. What it means is that businessmen and women who source for loans from banks can fall on the banks to request for loan facilities, and they can expand and do more good business. Once they are doing more good business, they are likely to employ more hands. More hands will be employed, and individuals will have funds or salaries to take care of their families. So if the trend should go on the way we are seeing it, then it will be good for the economy.
The MPC meeting by the central bank will take place next week, and with inflation coming down in December, what are your projections?
Okay, with the rates and how the inflation rates have been declining, it is very possible that the Monetary Policy Committee will reduce the MPC rate. We have gone through 3 successive declines in inflation, and that should inform the Monetary Policy Committee to be sure and be confident that rates within the economy or price levels are declining. Hence, they will also have to look at their model and then to reduce the monetary policy rate. So I am expecting a reduction in the monetary policy rate in the next monetary policy briefing to the press.
So inflation has reduced over the months, but people have been calling for a reduction in prices of goods and items. But some business associations are lamenting the fact that other factors are accounting for the high prices. So do you think people calling for reduction in prices is good at this time? Because business associations are also talking about the other things that are making the cost of business very high.
You know, when it comes to the price makeup of an item, you have the input side, where the suppliers of this product or the manufacturers of the product, goods and services that we consume will have to pay for. Now, the current items you are buying from the shops and on the market have been paid for with inputs that the suppliers and the manufacturers paid for some months back when inflation was high. Until we have a sustained reduction in inflation, it will be difficult for businessmen and women, manufacturers and producers, to quickly reduce prices. We should not also forget that the fact that inflation is on a downward trend doesn't mean that price levels are not increasing. Price levels are increasing, but it's just that the rate at which they are increasing is what is declining. So those of us who go to the shops to buy, what we'll be seeing in the short term is that we are going to be seeing a slower pace of price increases going forward than it used to be in the past. There's going to be price stability. going forward than it used to be in the past. It's not going to be the case that prices are going to decline from, let's say, 10 cedis to 8 cedis to 7 cedis. That will only happen in a situation where we have had a sustained inflation. Most importantly, deflation. Then we can think about that. But the way it is, we'll have price stability and not reduction in prices. So the economy is looking good. At least prices have been stable relatively. We are hoping that 2024, we are going to see a lot of stability on our macroeconomic front. Interest rates, exchange rate, crude oil prices. If we are able to get some level of stability in these macroeconomic indicators, and we also are able to have what we call enough revenue in terms of tax revenue, with the discipline promised from the government side not to overspend in an election year, then 2024 will be a good year. On the other hand, if we are not able to see the much needed stability on the macroeconomic front, and the government is not able to mobilize enough revenue, then things will not be so different from what we had in the past going forward.
All right, Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amoah, speaking there to my colleague Jesse Agbapo on varied issues on policy rate decision expected after the MPC meeting next week, and also on inflation decline. Turning to some other stories, 72% of businesses in Ghana perceive the country's business environment as lagging behind its peers. This according to the UK-Ghana Chamber of Commerce 2023 Ghana Business Environment and Competitiveness Survey. The report said that the firms believe Ghana's business environment slumped in 2023 compared to 47% that said the same in 2022. Here's more in this report.
This is in addition to a general view that other countries in the sub-region are not struggling as much as Ghana in the aftermath of COVID-19, the Russian-Ukraine war, and the supply chain disruptions it's found. Again, a staggering 75% of the respondents perceived corruption as a continuing bane to business operations, even though trends showed a decline in corruption compared to 2022. Regarding favorable business components assessed, the respondents favorably highlighted the availability of telecom facilities as one of the advantageous aspects of the Ghanaian business environment. It was also perceived that cost of labor, unskilled and skilled, remains affordable to most businesses. Additionally, the government's support of international trade and availability of good quality transport infrastructure ranked second and third respectively on the worst business components list. Over 690 businesses, including UK Ghana Chamber of Commerce members and non-member companies from 16 industries, ranging from small to large companies, participated in the survey.
Now, the Ghana Chamber of Mines says it expects manganese production in 2024 to exceed 5 million tons. The chamber said this will mark one of the highest productions in 3 years, once again solidifying the country's position as one of the highest producers on the African continent. Speaking at a breakfast meeting with the Minister of Lands and Natural Resources, President of the Ghana Chamber of Mines, Joshua Mutoti, bemoaned some factors affecting the extractive sector, pointing out to encroachment of illegal miners and high fiscal and regulatory costs.
Regarding manganese production, the planned output for 2024 is expected to double to 5 million tons. So really good projections for the year 2024 for us. The main downside risk, however, is to the overall mining production outlook in 2024. Includes the high fiscal and regulatory costs, encroachment of concessions by illegal miners, and sometimes we're not being too sure about policy with respect to implementation of, say, the Gold for Oil program and the impacts on its operations on small-scale miners. I'll go a bit more into details on that. The economic contribution of the mining sector in 2023. Despite the challenges that I've talked about, the mining sector continues to be the backbone of Ghana's economy. Impact on gross domestic product. On the back of the high turnover in mineral production the mining sector's value added to the economy increased from 9.3 billion cedis as of the end of the third quarter of 2022 to 13.8 billion cedis as of the end of the third quarter of 2023. In terms of its contribution to gross domestic product, the share of mining in GDP improved marginally from 6.5% at the end of the third quarter of 2022 to 7% in the equivalent period in 2023.
And thanks for staying on the marketplace. Businesses seeking to raise new venture capital have had a tough time in 2023. Deal counts and deal values have both declined significantly from 2021 and early 2022 when investors put record-breaking sums of capital to work. Now, this is speaking from a global perspective. Here to help us understand the changing trends and how it affects us locally is Prosper Melome, who is partner, investment banking, Bridgewater Advisors Africa. Great to have you in the studio. So let's start, first of all, want to understand what deals are and what deal flow is.
Okay, so basically when we say deals, we are referring to businesses in terms of how they execute growth or preserve capital. In that light, deal counts or deal flows typically refer to corporate transactions. Mm-hmm. And these corporate transactions can vary in terms of whether M&As, capital raises, project finance. This is typically the nature of deal flows. In looking at that, you can look at deal flows from a domestic, cross-border perspective. So when we say international deal flows, that's cross-border.
All right.
Domestic deal flows looks at deals within the economy. Another way to look at deals is also whether from a private standpoint or a public. Public deal flows are deals to do with the stock exchange, whereas private deal flows have to do with deals outside the stock exchange.
Okay. I want us to draw on the relevance because I want our audience to understand why we are talking about this in the first place. How is it relevant to our business landscape here in Ghana?
Right. So, I mean, in terms of relevance, like I said earlier, deal flows has to do with how businesses decide to grow or preserve capital. Mm-hmm. And to a large extent, deal flow is pretty much looking at the movement of capital. And capital is the lifeblood of businesses. All right, so in terms of relevance to businesses in Ghana, businesses are pretty much evaluating deals or deal flow from the perspective of how capital runs through their business, from the standpoint of access to capital, mm-hmm. deployment of capital, what you have, the mechanisms you deploy to preserve capital. So pretty much that is the relevance. And you know, in Ghana, you'd want to talk about most of the deals that occur within the domestic front in Ghana is debt driven.
Right.
So the relevance is within the debt space, that's commercial lending, what the banks are doing, the policy rates, influencing returns, so on and so forth. So really, that's the relevance we can put to it within our context.
So how has the landscape changed over time? How is that impacting on business in general?
On the global or domestic front?
Well, we could talk about the global and how that translates in the domestic market.
So on the global front, basically, we have to always bear in mind the role of the major economies, the likes of the US, the interactions with China, and the G20 countries. The power plays pretty much influence how capital moves. And for underdeveloped or developing countries, pretty much suffers a ripple effect. Now, on that level, we've had movements in terms of geopolitical tension over the past couple of years. I mean, we go back to Russia, Ukraine, and what happened. And currently, we are going through the Israel-Gaza situation, and the tension is causing within the Middle East, bringing in the interference of US and all of this. So, all of these factors on the high level tend to influence how business transactions occur. And that aside, we also have the issue of inflation and how a lot of economies have to deal with that. We've also seen a lot of rise in sovereign debt crisis globally. Mm-hmm. Even US has had its fair share. the issues of inflation. These are all factors that are shaping the global front. And like I said, when these factors occur, it sort of trickles down to developing countries. Ghana has had its fair share of impact of the Russia-Ukraine situation on the economy. We've also seen how our debt level shot up because we couldn't keep up to performance in our economy and have to restructure. So really, that is how it comes into play when we look at it from the global level and then coming down to the domestic.
I want us to talk a bit more about the Ghanaian situation and what it is right now. Right. What factors are driving deal flows in Ghana?
So in terms of Ghana and deal flows, or on any domestic front, the best way to look at it is first and foremost to look at international deal flows and domestic. With regards to international deal flows, the macro setting is definitely crucial. In the macro setting, the macro fundamentals, critical variables such as inflation and currency tend to play a critical role in terms of deal flow. So, I mean, FDI is typical big name in, measuring deal flow. Any foreign party with interest in our market would definitely want to know how value can be made or preserved, all right, in terms of increasing value for shareholders. And currently what we are seeing within our market in terms of the volatility in the cedi, the depreciation of the cedi, it makes it quite difficult, okay, for international deal flows to make that commercial sense and be viable for the parties that want to participate. Now on the domestic front, that's within the economy, we have a really, really high cost of borrowing. The financial system or the banking system tends to play a crucial role in how transactions occur and how deals are done. And so as we are dealing with these high interest rates, it's making business cases more difficult to justify to investors. And so for this particular season we are in, we've seen decline in inflation, and we are hoping that would have some form of impact on considerations for the monetary policy rate, and eventually we hope to see changes within the banking system as far as cost of borrowing is concerned.
Okay, but I want you to talk to us about the risks you perceive this year. You talk about inflation and the fact that you expect that the policy rate declines this year. That's a good thing, right? But what are the perceived risks in 2024 whilst you talk about deal flows? It's an election year. Anything that we should be on the lookout for?
Yeah, so in election years, typically, political risk is perceived to be high. Let's bear in mind the domestic, or let me say sub-regional political tension. We've seen a couple of coups within the sub-region. And so recently we saw elections in Liberia, and we are hoping that by Monday there'll be a smooth transition. We are looking at the case of Ghana. Ghana has had a good history. And so perceived political risk isn't that high for Ghana. But in the context of the sub-region, this is something that is considered high. And also within political years, there always seems to be this, let me say, artificial liquidity, because there's quite a lot of spending, especially when the campaign period for political parties begin. And so some of these spending sometimes may have an impact of even gains we achieve in reducing inflation.
Okay.
There's a possibility it may go up slightly because of some of these activities. But whether we regard Ghana a fertile period within this time for, massive deals to occur and all that, I'll say there are deals that are pipeline deals that are already been in the works, are likely to come to fruition within this year. I think parties would want to, key capital markets and investors, players within the space, would want to observe the economy a little bit more to decide how they intend to going into, whether a possible retention of same government or change in government, because let's bear in mind that the various governments do have various policies as far as the management of the economy is concerned.
Okay.
So you'd want to interpret that implication before you make major moves. So that's how I perceive this economy.
We have 1 minute left. I want you to talk to businesses right now. What advice would you give in terms of how they can position themselves to get those good deals?
Right. So when it comes to executing deals, be it capital raising, be it mergers and acquisitions, the basic line is this: as a business, you need to have a robust business model. Okay, and basically a strong business model is one that can survive the times, that can survive the changing scenes. There's also the need for flexibility in that business model, because obviously, looking at the dollar, you need to have a business model that can withstand those kind of shocks when it comes to changes in the economic setting. Mm-hmm. But that aside, fundamental, a business needs to have good records, because at the end of the day, to have deals done, it always goes down to the details.
All right. Pastor Melome, partner investment banking, Bridgewater Advisors Africa. Thank you for coming through. Hopefully we'll have you on another time to continue with this conversation. I appreciate it. And that's the marketplace. More news on our website, nigeriaonline.com/business. 72% of firms perceive Ghana's business environment as lagging behind peers, according to the UK Ghana Chamber 2023 Business and Competitive Survey. You can read more about that. Also remember that we've got our eyes on that joint press conference that is going to be addressed by the IMF and the Finance Ministry tonight at 7. You want to follow that here on this channel, Join News. We'll bring that to you live. My name is Daryl. Thanks for watching The Marketplace. Enjoy your weekend.